This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association. Your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Wednesday, May 15th, 2024, and we're so glad you can join us. In today's show, I will bring you the latest Iowa Ag News headlines, and then we will hear from United States Senator Chuck Grassley on the release of the GREET model for sustainable aviation fuel.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day, we are joined by Tyler Schau of agmarket.net. Tyler, a little bit of mixed trading throughout the day today. How did we end up closing?
It's kind of an ugly day today. From where we started this morning, came into after the mid-morning coffee break or early morning coffee break, and we were up strong and all classes up about a nickel on corn. One point we were up 15 cents on beans, I think 12, 15 cents. Wheat was up nearly 20, 25 cents at one point early this morning, and then it just kind of all fell apart as the day wore on, and pretty much every single grain except some of your extreme back month contracts ended up in the red.
So that early spike to start the day, was that just then everything was too overbought at that point and we went the other way?
Yeah, I mean, I think a lot of it is riding on the back of wheat. Wheat's been kind of leading this rally higher for the last several weeks. There was an outfit that came out and revised their Russian crop lower overnight. That hit the presses, and that kind of sent this market screaming higher. One of the things that we like to remind people, a lot of times the majority of the traders in the overnight happen to be your algorithmic computer traders or your AI trades. They read those headlines. There isn't a lot of other activity to interfere with them, so they just start going in and buying up. There isn't a lot of natural sellers then, pushes prices higher. Morning comes, humans take a look at stuff. Maybe they decide it's a little bit overdone. Maybe they reprogram computers, and then we push the momentum to the other side and start pushing it down. That could be a lot of it. I do think in corn, anyhow, $5 on December corn is kind of that magic number everyone wants to see. If you recall, there's a gap, I think starts at like 497 to 504, somewhere in that neighborhood. So that's going to be a tough one. December corn went right up to 496 and 3/4. That's the high. We had some guys with orders to sell December corn right there, got filled. We had other guys with orders to sell 497. Still don't have it sold. We closed down here at 487.5. So there's going to be a lot of selling up at some of these levels. Wheat kind of peaked out around that $7 level on the July in Chicago, as well as Kansas City. So some psychological levels we keep bouncing up against and just can't get over, and selling momentum takes over.
On the other side of the ag marketplace, what happened with the protein sector today?
Wasn't a lot, a little bit of back and forth trade, anywhere from down 50, 60 cents in feeders to up $1.50. You're going to close about even in your nearby contracts, up 50 cents in your back month. Fat cattle, kind of the same story, just kind of a little bit of back and forth trade, as well as hogs, to be right honest with you. Your June contract in hogs is down 82 cents. The remainder of them, both sides have unchanged.
Tyler, here in the office, we've been getting ready for World Pork Expo coming up in a couple of weeks. And when you think about where the hogs were at this point last year, it was not a pretty picture. What do you think about the current state of the hogs right now, a year later from that point?
It's good you bring that up. It's kind of one of those reminders of where things can be. We were trying to remember back in my head, probably that $75 range on hogs a year ago. Don't forget this fall, we were down in the $70 range. We've had a really good run up here. If you compare, I talk a lot about this. I deal with a lot of cow calf producers, so I talk a lot about this with those. If you compare, recent highs to where we are right now, it can feel a little depressing because we are quite a ways off of those recent highs. Same in hogs. July hogs at one point were 110. Today they're right at 100. So we're $10 off our highs. But when you take a look at the big picture and you step back and kind of are able to see the forest, we're still at awfully good levels. So, if you need some risk management or some hedge protection here, I'm still a fan of LRP put options, whatever I can do to put a floor under hogs, fat cattle, feeder cattle, you name it, all the proteins.
So, Tyler, if a producer is thinking about these things, what's the best way to get in touch with agmarket.net for more marketing information?
Check us out on the website, agmarket.net. There's a contact page. You can look up, find a broker in your area.
Tyler Schau of agmarket.net. Thanks so much for the time here today. Have a great rest of your week.
You bet. Take care, Mark.
Thank you to Tyler Schau of agmarket.net for our closing market summary. Let's turn now to the closing numbers, which can be found under the markets tab of our website at iowaagnet.com.
July corn closes down 5 even at 462.5. July soybeans down a penny at 1213.5. July soybean meal down $1.60 at 371.70. July soybean oil up 15 cents at 43.55. Chicago wheat down 6 3/4 at 665 3/4. Minneapolis wheat down 6 1/4 at 727 even. Kansas City hard red wheat down 8 1/4 at 675 even. July oats down 25 even at 397 3/4. On the Merc, June live cattle up 7 cents at 178.25. May feeder cattle down 12 cents at 243.15. June lean hogs down 82 cents at 97.50. June pork cutout down $1.15 at 103.50. Class 3 milk down 3 cents at 18.69.
That's our ag market coverage for today. It is time now to hear from our sponsor, the Iowa Soybean Association and the Soybean Checkoff. And up next, it is the latest Iowa Ag News headlines.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
The June 1st deadline for eligible Iowa farm owners to apply for Century or Heritage Farm recognition is quickly approaching. The Iowa Department of Agriculture and Land Stewardship is encouraging farm families to apply today. The program, which was created in partnership by the department and the Iowa Farm Bureau Federation, honors families who have owned their farms for 100 years and 150 years, respectively. This is the 48th year of the Century Farm program, which started in 1976 as part of the nation's bicentennial celebration. To date, more than 21,000 farms from across the state of Iowa have received this distinction. This is the 18th year of the Heritage Farm program, and more than 1,800 farms have been recognized since this program began in 2006. The completed applications must be postmarked or received by the Iowa Department of Agriculture and Land Stewardship by June 1st, 2024, in order to be included in the August 15th ceremony, which is held during the 2024 Iowa State Fair. To apply, download and complete the application found on the department's website and return it to the Iowa Department of Agriculture and Land Stewardship. House Ag Committee Chair G.T. Thompson released a more detailed, title-by-title overview of his Farm Bill proposal. The full overview includes many key provisions, like increasing the statutory reference prices by 10 to 20% for all covered commodities in Title I. His proposal increases the agricultural risk coverage guarantee to 90% of the benchmark revenue and expands the maximum payment band to 12.5% for both ARC-IC and ARC-CO. It also increases marketing loan rates for most commodities. A full draft could come next week, and Thompson has markup scheduled for May 23rd. Also on today's show, I bring you comments from United States Senator, Iowa Republican Chuck Grassley about the release of the GREET modified emissions model for sustainable aviation fuel.
The Agriculture Department needs to show Washington bureaucrats how our corn and soybeans are handled. Farmers carry all their grain to the elevator or the ethanol plants unless it's fed to animals. No one can discern which methods were used to grow each individual grain that gets mixed into the elevator. By the time the ethanol gets to the aviation fuel plant, it's impossible to know what kind of technique or equipment was used to produce it. Here are two main issues with the Biden administration GREET model decision. First, this formula is going to be easy to violate. Second, without grain in the formula, there won't be enough feedstock to make all the sustainable aviation fuel that environmentalists are crying for. To put it bluntly, this GREET model update is a stupid approach. Widespread use of sustainable aviation fuel will help fight global warming, but rejecting grain feedstocks will impede efforts to produce that fuel on a commercial scale. Another question is, who will bear the administrative burdens associated with this new requirement? Will it be the farmer? Will it be the ethanol refineries? Will it be the sustainable aviation fuel plants? Some people might argue this decision won't impact farmers' bottom lines because they can sell their corn and soybeans elsewhere. That's hogwash, and it shows that the people say it don't know much about how farmers deliver their grain. These new barriers to entry will strip farmers of significant market opportunity. The Department of Energy developed the GREET program to be very science-based, as you would expect it to be. The Biden administration's update undermines that scientific data. It hurts farmers, and it sends mixed signals on climate solution.
Senator Grassley also recently visited his local grain elevator in New Hartford, Iowa, and explained why he thinks there are shortfalls within the Biden administration's modified GREET model.
Here in New Hartford, Iowa, at my local Farmers Cooperative grain elevator, where we do business, and I've done business throughout my lifetime, and I'm here to tell everybody how difficult it is under this GREET model to keep grain separate that's going to be used for aviation fuel when every farmer comes in here from every other farm in a large area and commingles corn. So do bureaucrats in Washington understand the difficulty of separating corn grown for aviation fuel as opposed to just other corn that's grown? It all makes ethanol, and the ethanol will help the next stage for aviation fuel. And we got to use common sense when these rules are put out. And I'm convinced that the bureaucrats in Washington didn't consider all these intricate marketing of grain from different farms. You could say from 86,000 different family farms in the state of Iowa.
That is United States Senator Chuck Grassley. And that brings us to the end of today's show. You can find all of our content on our website at iowaagnet.com. You can also follow us on Facebook, X, LinkedIn, and TikTok. And you can find our video content and previous episodes of AM PM on our YouTube channel. Don't forget as well our free morning, midday, and closing market podcast, which are found on Apple, Amazon, Google, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Mark Magnuson. On behalf of Riley Smith, Dustin Huffman, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.